welcome back. Market Talk Monday here with Isaiah Porter and the gang over at Foundations Investment Advisors, waxing eloquently on all things markets.
Yep.
Isaiah, so weekly commentary from Chief Investment Officer and CFA Darren Levitt and your management team at Foundations. What's new for the week of the 7th?
So last week we saw a lot of Q3 earnings reports. They came back pretty strong, but we saw the market have a little bit of a pullback, mainly due to probably government shutdown. Government shutdown extended 40 days, the longest government shutdown in U.S. history.
Yeah.
So we saw a little bit of a pullback despite strong earnings from a lot of companies. And also what I've been reading, what I've been seeing, and a lot of talk on, if you watch CNBC or read any of their articles or market insiders or anything like that, the shift from AI. People are seeing a lot of AI initiatives, but we still haven't seen the fruits. We've seen it through like ChatGPT and all of these cool AI innovations that we have, but all of this large sums of money, it's still not fully transparent to people what the reasoning is behind the technology that's being built. And I think once we see the fruits of the $9.7 billion energy deal between Iran and Microsoft, or the $30 billion deal between Amazon and OpenAI, and Google announcing a new AI chip, what is the reasoning they're doing this, and what's the reasoning behind it, and what new innovations are going to come from it? So there's still, with that said, there's still room to grow in that AI market cap. But there's going to be trepidation along the way, especially with government being shut down. Hopefully that gets resolved this week.
The wires are coming out today from Fox News to everyone to the left and right of Fox, that we're going to see a potential Senate and House plan passed.
Mm-hmm.
And Senate had kind of a mock vote last night. That passed. I think the only Republican who voted against it was Senator Paul Rand,
Mm-hmm.
which I would say he's kind of still of that old school Tea Party where any government spending that's above a budget,
Mm-hmm.
he's going to vote against. And I get it. It makes sense. However, we again are in a world where the government can still print money.
Yep.
They can still create this economic phenomenon that we're aware of in a fiat currency.
Yep.
They can create the environment of kind of ghost money moving forward into realistic perpetuity.
And that's kind of what I want to hit home for our clients is when a government is printing money, so they're printing this money, the currency should be devalued because there's more of it in circulation. But when there's a devalue of dollars, that's when you use something. A stock market is a hedge against inflation. So the eroding of your purchasing power, when that's down, you should run to the market in a sense of that should be your hedge against inflation. Now, picking the right equities and being diversified inside the market, all of this matters.
The D word.
Yeah, you need to have that inside of your portfolio. But if we see a large sum of money being printed, there's going to be inflation behind it.
Yeah.
And
so
running
large
to
sums of money being printed is not elusive is the wrong word, but exemplifying not a contrarian market, but actually where the government's saying we're going to infuse money into the market or quantitative easing.
Yep.
So we're going to ease the ability for money to hit the markets versus raising the rates and tightening that.
Mm-hmm.
So as we've seen, and as news is reporting, like there's Palantir Technologies is a prime example of financial earnings that have been better than expected. And we're just seeing the companies rebound now off of last week's pullback.
Yep.
And when you throw in that the government is hinting at there being a resolution and passing a new spending bill, and the government shutdown ceasing, we're going to see the markets act positively
Yeah,
with that.
and I come to think the federal government's a large employer, the largest employer in the United States, and the reasoning you could see a little bit of a pullback. I mean, it may. I'm not exactly sure. I don't have the statistics in front of me, but federal employees aren't working. They're not collecting a paycheck. So I was kind of expecting to see a downturn in the market. I mean, it's a large group of people. Yeah. So selling off positions in order to lock in gains and use it for income, pay their bills, do whatever they need to do. I was kind of expecting to see a little bit of a pullback the longer that government shutdown reaches out.
Well, it's starting to show up. I mean, even in our retirement workshops, the last two that I've conducted, I've had people walk up to me afterwards and say, hey, I'm a government employee. I've now been without a paycheck for 30 days. I'm now going through a third or more of my short-term reserves before I'm hitting any of my investments. And then the question's asked, should I take money out of my TSP? Should I take money out of my IRAs? And had a phone call with a client today that had that same question. So what should we think about if you're going to take money from an IRA, if you're going to take money from a TSP? Should it just be that microeconomic decision, or should we still look at the big picture of saying how is this going to affect?
Yeah, that's what the planning process is behind it. And when you're taking money from these IRAs or your TSPs, you want to be cognizant of the effect that's going to happen down the road come April. So you want to make sure it makes sense.
Come April 2026.
Yep,
so
April
this tax year 2025, you're paying taxes on an IRA now.
Yep.
If you have withholdings, then that's going to cover some of it.
Yep.
But it's important to do a tax plan, like a tax distribution plan.
And that's exactly what I spoke to the client about this morning is, hey, I just don't want to be, you talk about it in your workshop, I don't want to be the advisor that gives the client the big middle finger. I want to be the advisor that takes care of the client. Even in the equities market, we can sell your positions and I can have it sitting in cash inside of an IRA without any tax being implied to you yet. And that's what I've done in this current client scenario. I've sold some positions to make sure that in the worst case scenario, I can act on it if he really needs the money and he's in kind of.
So you're saying you raise cash, so you have cash, but the cash is still in the IRA.
Yep, with no tax implications to him. Sell off the positions because that's the benefit of that qualified account. But the con to follow is as soon as I send that out, he's going to have to owe Uncle Sam some money for taking that money.
Right. Now there are some rules that if you take money out and we don't withhold any tax, if he puts the money back in within 60 days, that's
kind of a wash sale at that point.
No, not even like a wash sale, but that's a non-taxable event as long as he gets the money back in. Now, to your point, if you're selling those equities or selling those positions to raise cash, that in and of itself, no harm, no foul, because it's in the wrapper of an IRA.
Yep.
But if he distributes it out to his personal account,
that's when the tax is owed.
Yeah, and he could decide at that point, he or she could decide at that point whether or not to withhold any tax in an IRA. You can't do that in a 401k.
Yep.
But in that distribution, you can decide whether or not to withhold income tax. And then if they do not withhold any income tax, an example of this could be where if, let's say, the government comes back to work and he's still working for the federal government in this scenario.
And he gets back pay.
He gets back pay, brings him back to even, brings him back to par in his financial world. Then we could put that money back into the IRA as if it never happened. It used to be that you could do that as many times as you wanted in a tax year. Now, you get to do that one time per year.
Yep.
So that could be an option. Another option could be, well, maybe consider using home equity lines of credit. Maybe consider using a personal loan, or maybe even like a withdrawal from a credit card if you're getting favorable rates, or if you're getting money at zero rates,
Yep.
or or little to no cost. Compare that to the tax that you would have paid. And the point here, folks, is what we're trying to say is put a tax plan in place.
Mm-hmm.
Understand the consequences of those distributions, especially if you're taking them from IRAs, to help manage your cash flows during a distribution phase.
And it goes back to that we have to take this distribution out, and then you look at market performance on Friday. The NASDAQ tumbled 3%, and the S&P fell another 1.5%. So you take that and you have that distribution, so you have that tax consequence on top of negative market performance. Now, today's Monday. The market's rebounded. The NASDAQ this morning at like 10:30 was up 1.5%. So the market has rebounded at this current time of the day. But if the market had kept falling, you end up losing more money from tax. They had to take the distribution. So it's all a plan that comes together.
Yeah. So, not beating that dead horse, but you've heard us say this over and over again in interviews we've done with you on the money management side of the house. You have to have a well-diversified plan. Mm-hmm. Let's have a plan that involves equities, stocks, bonds, mutual funds, and your fixed accounts, cash, short-term savings, long-term savings, that's not exposed or non-correlated to those annuities, cash values in life insurance. Precious metals could even be in that non-correlated world to the market itself, like equities. Mm-hmm. There could be intra-family loans. There could be family loans that could fall into those categories. So you have to think a little bit outside of the box of, I have more than one place to pull capital from. Mm-hmm. Just willy-nilly going and taking it from the IRA may not be in your best interest to do that. So analyze that carefully before you make a distribution is the recommendation that to consider.
Yep.
Got it. All right. So gold.
Yep. What's
been going on with gold during this government shutdown?
Gold's been hitting all-time highs.
Yeah.
Gold's been hitting all-time highs, and it kind of, from what I've seen, is acting inverse of what the market's doing. And that's what that gold commodity has always done. When there's fear and fear-mongering in the market, you've always seen gold have a huge uptick. So everybody runs to gold or bonds or some sort of what they would call a safe haven during hard times in the market. So anytime you see a big pullback, you'll see gold go up in its price and get highly valued again. So gold was up $14 last week.
Yep.
So about $4,010 an ounce.
Okay. And it did fall off its high
Mm-hmm.
last week and then came back, right? If
Yep.
I remember right.
It's back close, trading near its high.
And then on the other side of the coin of kind of commodities is Bitcoin. What's going on in that world?
Bitcoin fell. Actually, last week fell down to 99,000 again.
So about 7.5%. Okay. And it fell below 100K.
Yep. And then it closed at about 101 is where it ended at
last week.
Mm-hmm.
And so it's up again today, I think it was.
Yeah,
still.
I think so. We don't really trade Bitcoin too often inside of our portfolios that we manage. So I'm not very keen on. I follow Bitcoin's pricing, but I'm not as keen as I am what's going on inside the big three of the Dow, NASDAQ, and S&P.
And if it's being traded, you're trading it inside of exchange-traded funds.
Mm-hmm. Inside of our
ETO.
ETF.
You're not actually trading the individual holding.
Yeah, through our current custodian at Charles Schwab, Charles Schwab doesn't have a crypto side of the house yet, and if a client wants to be inside of Bitcoin, we'll do it through ETFs. And if not, I'll assist the client. I don't get paid for it, but I'll assist them setting up a crypto wallet. But most of the time, it's really cumbersome for a lot of, especially our client base, with a lot of retirees. Very cumbersome.
Who are already in the distribution phase.
Yeah, very cumbersome. It's volatile, and it takes a lot of time to set up and get used to, and all sorts of different things. So,
got it. Anything big for the economic calendar looking out over this week? Anything that we should be paying attention to, or is it going to be just kind of another quiet week until hopefully we get the government
Yeah,
back to work.
be a quiet week this week. Hopefully, it will be. We'll have the government come down and say that the shutdown's ended. Just to kind of go off on my own a little bit here is, and I wanted to get your take on this as well. For all of these social benefits, like you hear the talk of SNAP and like people need the money to feed their families and all of these social benefits that you see. I've always been a big advocate, especially in this last year, that the United States starts a sovereign wealth fund and uses interest and gain from the fund to fund social benefits.
Yeah, I mean, for me, I can't think of a reason why that would be a horrible idea. I'm sure there's some folks that we could bring on a podcast that could argue both sides of that. You know, the countries that have done it really well, Norway, Saudi Arabia as an example, their sovereign wealth funds have helped their people and helped their countrymen. The U.S. doing it, I know Trump has some favor in doing that. So my opinion would be, if it helps bring down the national debt, if it helps equalize wealth in our country where there's not a great divide between the poorest of the poor and the wealthiest of the wealthy, where we could really have, all citizens participate in some sovereign benefit of the wealth of our country. I can't see that being a horrible idea. I'm sure there are some extremists out there on the right who would say, Kenny, you're nuts. That would just incentivize people to stay at home and not work. And I mean, if that argument, they're kind of getting that now with social benefits and it's something that I think needs to be looked at. It needs to be studied, because obviously the obvious answer for me, Isaiah, is we can't continue kicking the can down the road. Off balance sheet, or
Fiscal
a better way to say it would be, our current U.S. balance sheet is somewhere between 37 and 39 trillion of debt to our country.
And future liabilities added in is upwards of 100 trillion.
Yeah, so what's referred to as fiscal gap accounting. Dr. Lawrence Kotlikoff at Boston University is kind of a leader in that thought process. Fiscal gap accounting says that the U.S., because of its liabilities with Social Security, its future liabilities with Social Security and Medicare, that our debt's somewhere closer to 121 trillion and counting. So when you think about it that way, having a sovereign wealth fund, I could see an argument for that being able to help bring down the national debt, and keep what we refer to as our fiat currency, our fiat dollar. That would theoretically be what backs it.
Yeah.
Is, having countries that could invest. And so theoretically, instead of investing in treasuries, maybe countries invest in our sovereign wealth fund. I don't know.
Yeah.
That we'll leave that to the Darren Levitts of the world and policymakers to help figure that one out. I think when it comes down to what we do for our clients in the space of financial planning, it always comes back to, I'm going to ring this bell again and say it again.
Diversification.
Keep it diversified, and diversification all the way down to correlated and non-correlated investments.
Asset location and tax
asset
status.
Location. Love it. Love it. Hey, before we hang up the headsets and the mic today, there is an important day today. There is an important date on the calendar as of our recording.
The Marine Corps birthday.
It's November 10th, Marine Corps birthday. So I'd like to say a happy birthday to all my brothers and sisters of the greatest fraternity of all time, Isaiah. And tomorrow, leading into the Marines, can't forget the rest of the branches who weren't ready to be Marines yet.
Yeah.
like the Army. Um,
I joined the Army because even Marines need heroes.
Marines need heroes. You got it. You're my hero, son.
There you go.
Veterans Day tomorrow. So, again, a shout out. And if we had a little toast here, we'd do a little special toast, but we'll do it with some KP and Co. water.
H2O.
Thank you to all the Marines that have served all the way back to you Marines to 1775, November 10th, in a little pub called Tun Tavern in Philadelphia, Pennsylvania, Isaiah.
Mm-hmm.
That's where Marines started, in a bar.
Yep, of course they did.
Yep. So thank you, Jarheads. Thank you to the vets out there. Thank you, son, for serving.
Yep, thank you.
Proud of you for doing that. And we appreciate all you that have served and the families that have sacrificed and served. Here's cheers to you. Thank you. Cody, thanks for serving us back there behind the scenes.
Yep.
All right. Take care, guys. Have a great day.